Alright, guys, so China has had enough. Beijing has issued an ultimatum to Europe not to cross the line. And if they join the US in a trade war, there will be a lot of economic damage in the fallout. Just listen to the French finance minister. Europe is taking a rather hard line against China. It's the same overcapacity attack once again.
Thinking on all the possibilities to avoid having our industry being jeopardized by unfair trade practices or by industrial overcapacities coming from China. We need a dialogue. We need a common assessment of the situation, and I will propose to the G7, to the IMF, to have an in-depth common assessment of what it means industrial capacity, overcapacities coming from China.
Europe is about to announce new trade barriers on Chinese goods on June the 10th, so it's just a few days away now. Beijing, of course, shot back. China will take all necessary measures to firmly safeguard the legitimate interests of Chinese companies. So we are on track for a collision course between the two economies. Unlike the US, China is selling a ton of EVs into the Eurozone market. If Europe throws up the trade barriers, it will hurt Chinese EV companies. But this would also spark a bigger trade war with the West. Europe currently imposes a 10% tariff on all car imports. By doubling it to just 20%, Chinese cars will take a big hit. Chinese economic damage is projected to hit nearly $4 billion. This huge loss will benefit EU car makers like Volkswagen and Mercedes. People in the EU will be forced to buy domestic cars because Chinese EVs will be priced higher by force. At least that's the fantasy they all hope. That's the original plan. But this is a rather naive one-way assessment. China will respond. Trade goes both ways, let's not forget that. Europe also sells into China, and the market there is enormous for EU goods. And even with the trade barriers, China isn't going to collapse. The EU isn't just the only market China is selling into. Sales in Asia are strong and exports are flying off the shelves. Global demand for Chinese cars is extremely high. In Southeast Asia, BYD alone has cornered a third of the entire EV market, and that's just one single company. If you go all the way to Thailand, 8 in 10 electric cars are Chinese. Of these 8 cars, half of them are BYD imports. And that's how fast China's moving into other markets. Europe isn't the only game in town. In Latin America, which is a growing economy, Chinese cars are flooding the streets as well. Chinese EVs to Brazil are exploding. They've gone from 5,000 vehicles a month to over 20,000 in April. This is a four-fold increase that will continue to grow. Europe wants to protect their markets from cheap Chinese cars. We can understand why, but the retaliation will destroy Europe's automotive industry. While EU governments are going full protectionist, business people on the ground realize the futility of it all. You can't fight against progress, you can't block economic destiny forever. Volkswagen came out denouncing the trade war. Raising import taxes to 20% or more is just a delay tactic and they know it. Chinese companies are moving to build cars in Europe itself so the tariffs will be less effective. Chinese car makers are working with EU brands to sell into Europe. They're not really going around building dealerships from scratch. They are leveraging existing relationships built over the decades. Leapmotor, which is a Chinese firm, is working together with Stellantis, a French automaker. Because of this, they can utilize the distribution channels of the company, and this allows them to sell across Europe into markets including Italy, France, and Germany. There are over 200 points of sales they can use to push EVs out to consumers. And if Leapmotor can figure this out, I kind of guarantee you other companies like BYD, like Geely, will follow this strategy as well. While politicians like Borrell and von der Leyen wants decoupling, the executives of the companies are saying no, they have different thoughts. They are still working with China because if they don't, Chinese companies will simply leave. They will manufacture back in China and still crush EU car makers. Their vertical integration makes Chinese EVs cheap even with all the tariffs slapped on them. And here's what we mean. China is dominating the entire EV supply chain, especially when it comes to batteries. Graphite mining is dominated by China. The material processing is cornered by China as well. Battery components and their production are all controlled by Chinese companies. There's a reason why the market is totally under their control. Local production costs are very competitive. Countries around the world, they all import materials from China to build their own EVs. And if we do enter a full-blown trade war with Europe, China could always impose export restrictions on these materials. In 2023 alone, Europe imported $23 billion worth of lithium ion batteries from China. Imagine the consequence of battery restrictions. This will send the price of EU cars soaring to the moon. You can't conjure a new supply chain from nothing. It will cause a bomb to reshore and build these new capabilities. And is that possible? Yes, but once you see the price tag, you quickly understand why it isn't feasible. To just build the facilities, Europe will need to spend at least $98 billion. And those are just the factories, refineries, and plants. Almost $100 billion for the capital expenditure or the capex. But that's as far as the project will go. Europe still needs to import minerals like rare earths. Russia and China alone controls 50% of global production. And let's not forget about labor costs and the price of energy. Both of these are much higher in Europe versus China. So the idea of building out an entire EV industry is just a pipe dream. It's not just EVs Europe has to worry about. China also has another powerful economic weapon, and that's their consumer market. For almost a year, we have heard the narrative of the Chinese economy collapsing, that companies and consumers they are all dead broke, but Europe still seems desperate enough to sell stuff to Beijing. Airbus from France is scrambling to sell 100 wide-body jets to China. And because of trade tensions, the Boeing deal has collapsed. So Airbus wants to come in to steal market share from the US. Once again, this highlights the double standards going on here. Europe can sell stuff into China, but when China wants to sell EVs into Western markets, it's suddenly heresy. EU companies themselves are trying to break away from the actions of their own governments. Airbus is a perfect example of the economic reality that decoupling with China is simply impossible. In an interview with a German paper, the chief executive of Airbus flipped the script. He actually blamed the US for the trade war. It was not the Chinese who imposed tariffs on European aircraft, but the Americans. And this is a clear sign of how US policy is making life difficult for real companies on the ground. Biden is pushing Europe towards making a very horrible mistake. And if the EU raises trade barriers on China, Beijing will hit back hard. Big orders, including the Airbus deal, could simply fall apart, and that will destroy the biggest growing market for the company in the years and decades ahead. And a big shout out to our sponsor today, Indigo Precious Metals. When it comes to buying gold and silver, I trust Indigo Precious Metals in Singapore. They have made investing in precious metals safe, fast, easy, and simple for both small and large scale buying. I've been stacking gold for over a decade now, and I've learned two things when buying. You want to buy authentic gold bullion, and you want to buy it at the lowest premium possible to stretch your dollars even further. And I'm glad to say I found both of this at Indigo Precious Metals. There's a lot of uncertainty in the world today. We have geopolitical chaos and the values of fiat currencies getting debased. Inflation is not gonna end, and that's why I consistently buy gold to preserve my wealth. Indigo Precious Metals is a leading retailer in Singapore. They specialize in physical gold, silver, and platinum. They are my one-stop shop when it comes to buying bullion. Their prices are sharp, and they have the best brands on sale, and I can test the gold on the spot. So if you're looking to make your first gold purchase, Indigo Precious Metals is the best place to start. Whether it's 1 ounce or 1 kilo, this is the reputable dealer you are looking for. So take action today. Click on the link below and enjoy a discount on your first purchase with the code SeanFu. Start your gold stacking journey today. According to Airbus, China's air traffic will grow by 5.3% annually over the next 20 years, significantly faster than the global average of 3.6%. And that's a 50% difference for the next 2 decades. As the Chinese middle class continues to grow, they want to travel, that's rather obvious. And that increases the air traffic, which will jack up the demand for airplanes. It's a very big market for France. The Airbus CEO is furious with the trade war because China is literally the golden goose for his company's survival. And here's how staggering the numbers truly are. China's traffic will result in demand for over 8,400 passenger and freighter aircraft from now until 2041. This demand accounts for 20% of global aircraft sales going forward. Europe's tariffs on China will have a terrible blowback effect, and a big one could be in the aviation industry. All the decisions made in Brussels will backfire, and France might just be the biggest loser here. There are still many levers of power China can pull. Cancelling orders of EU goods is just as painful as restricting critical imports. It's not a coincidence that Airbus is speaking against the trade war. It all revolves around China's retaliation. There's a reason why Airbus has an assembly line in Tianjin. Building planes in China is extremely cost effective, and it allows the company to stay ahead.
We are present on most of our products with some production in China. We are buying from China, and this is therefore a cooperation that benefits both sides, and at the end that benefits to the public with the ability to fly, domestic flights of course, but also international. So it's a global partnership. Aviation is a very global business by nature, and that's one of the good examples of what the two parts of the world, the Chinese and the European stakeholders, can achieve together.
So imagine a world where Europe gets into economic conflict with China. Instead of cooperation, we'll have total unbridled competition across the board. Now, aviation is one of the few industries where China doesn't already have a lead. In 2022, the majority of Chinese market share went to Boeing and Airbus. Combined, they have 95% of the entire market, and this is what's known as a duopoly. And that's when two companies control the entire market. The last thing you want to do is to wage a trade war with China. You will cause them to move faster in aviation and challenge the Western companies. They have done this before in EVs, in shipping, and they are doing it now in AI chips. Airplanes will be the next frontier. China's COMAC already has more orders for airplanes than either Airbus or Boeing. 520 orders versus Airbus 430 and Boeing's 260. And these numbers are from 18 months back. COMAC's market share has probably doubled in domestic China since then. And if a trade war breaks out, what do you think the Chinese government will do? They will give COMAC even more subsidies. This is a private company after all, under state control. So it's going to be a no-brainer what their strategy will be. COMAC will be flushed with so much money to develop a better and cheaper plane versus the West. US and French planes won't be able to compete 5 or 10 years down the road. And that's just on the subsidy side. A war goes both ways. As the West hits China with import taxes, the Chinese can play the same game as well. Through April this year, Boeing delivered 22 aircraft to China, and these are imports into the country which can be targeted. Beijing is already thinking of a 25% tax on US built aircraft, and if Europe joins America's trade war, French planes could get taxed as well. And this is one outcome I'm sure the Airbus CEO is anticipating. His company could be collateral damage if Europe goes too far. Now, a trade war hurts everyone. Just because China takes the hit first doesn't mean economic karma won't come for everyone else. Everyone loses. Now, just because the West unites against Beijing is not a sure win strategy, it's not guaranteed. They might lose the war. A trade war with China will devastate EU industries. It will cause more companies like Volkswagen to move production all the way to guess where? China. They'll build more factories in China. And that's the only place where it's feasible to do so. Even the IMF is freaking out. They are warning of a 7% global GDP collapse from a US China EU trade war. And to put things into context, 7% is equivalent to the entire economies of Japan and Germany. The majority of tariffs have no justification or basis, and it's only going to make prices rise. So hang tight, guys. The EU is about to dig their own economic grave, and everyone is going to suffer. We'll have higher inflation and higher rates for many more years to come. But let me know what you think. Will Europe really escalate the trade war? And how will China respond? Let me know in the comments below. Stay safe, be sure to smash the like button and subscribe as we navigate through these crazy times.